Good morning, good morning, good morning. We are live, rocking and rolling here. This is options trading with Malachi if you're new. And what I do is I show you my options trades. And someone asked me, why should we watch you the other day versus watching someone else? And I tell you what, you should watch me along with other people. Why watch me along with other people? Well, the answer is simple: to learn. And what I do is I show you my trades, and hopefully you can learn from it. And if you have questions and want to ask, you can ask me those questions. We're a couple minutes late today. We won't even talk about the debacle yesterday with the school buses on the first day of school that didn't actually show up to pick up my son. But that's okay. Things like that will happen. So, jumping right in to the live options trading. This is Tastytrade. This is one of the platforms I use. I also use Charles Schwab Thinkorswim, and I use Robinhood. So lots of different options for my options depending on what I need and how I want to store my money. Tastytrade is probably one of the most intuitive and the sites that's easier to use. It does cost a little bit more on the trades, and this is a business account, which their personal accounts are better. I set this up under the business name, but that was probably not worth doing. So we'll just roll through. Bonds are down a little bit again, not doing anything with bonds. And Amazon's up today. I did sell the covered call at 160 for September. We're just going to leave that in place and probably allow that to expire and get the shares called away. Google dropped again. And what we'll see is Google dropped yesterday, and now as it goes back up, we'll pick up value in Google in the shares and lose value in the 370 call. That's one that if it gets called, if as it goes, I'll watch it and may close it early and exit the shares or roll it out if it's not at 370. Robinhood down a wee bit. QQQ. So if you recall, we did roll out the call yesterday. It looks like everything. We'll jump in here and look at the activity. And our 755, 735 call that we set yesterday closed for profit, as well as, do we have an 11th call or a 12th call? Looks like all the puts except for the 12th put. So the put that we opened yesterday at the 700, 660 stayed open. So as this market pulled back hard, the call closed, and we rolled this out because we were at a $1,000 loss yesterday on it because basically it was completely upside down. And as long as we stay under 715, then this is going to close out in another week in the money, and we'll or out of the money, I guess, so to speak, and we'll make money on it. So we did pick up somewhat of a premium on that. The trade price was 14.40 and 9, so it cost us. We made a little bit. We were upside down by $3. It looks like $4 or $5 right there. 14.40. It's almost $6, and we're made most of that back. But we'll let that keep going and get to the point maybe where it gets down to be $1 and get back out of it. In fact, let's set a closing trade for that, because for some reason that doesn't have a closing trade on the 19th. If it becomes worth $1, so we sold the 715, we bought back the 725. It's now worth $4. If it gets down to $1, we're just going to close that and call it a win. And let's take a look at the trades. So today's trade, we're going to run out. QQQ is down again. Volatility's still up. So we're going to run out here. Nice. And look at the, let's see here. The 690. So we're going to sell the 690 for 210. We're going to sell the put at 690 for 210. We're going to go 40 wide, So we're going to run down to 650. We're going to buy it back for 25 cents. So our target profit on this, or our profit would be, max profit available would be $1.90 per share, or 190. So 190, and we're risking $4,000 because it's 40 wide. 4.75% for the week. But we're going to set that to close at $1. So we're going to set that. We're going to immediately turn right back around and set a closing order for $1. And now we've targeted $1 in profit, or $1 or $100 for the day so far. And this account, I like to target $200. So let's take a look at where we're at with the SpaceX here. SpaceX dropped down after earnings. Now, I sold SpaceX at 135. I think what I want to do with SpaceX, this is a week out. I sold this. I think what I'm going to do is buy this back. I'm going to buy one of them back, and then I'm going to sell one further down. Let's go down to $1, or let's go down to 130. Let's see if that makes us any money. 44 cents. Let's see, let's go. So basically what I'm doing is I'm just rolling this is the uncontested trade, right? It's made us money, and I'm just going to roll it closer to the money on the same date. So I'm just going to roll it down closer to the strike or closer to the current price, and try and pick up another $1 in premium right there. So I'm going to roll it down to 125. So I'm leaving one of them at 135. Hold on. Excuse me. Excuse me. I'm rolling the 135 down to 125. And we're picking up another $1.10 in premium. And what I'm going to do is I'm going to set that one to close at $1. So we'll leave this at 135. As this time expires, our theta decay, and what we can see is the theta decay is 34 cents a day, or the delta is 24 cents, or 24. And what that means is for every $1 move, that's going to lose $1 in value as it moves down. So theoretically, if this moves down to 105 or 104, and what we can do is we can look at, say it moves $5 down, what a 120 contract would be. Actually, we would go 5 in the other direction. So 130, theoretically, if nothing else changed, if it just moved $5 down right now and the volatility didn't change, that same contract would be worth $1.65. So we need it to move, in this case, maybe $10. And what you'll notice is the delta changes as you move further out. It moves less each time. So if it goes down to 100, theoretically this would close immediately. I wouldn't expect that necessarily because your volatility might increase. But if as we wait every day, we're losing $30 in value on this, which is good for us because we sold it and we want to buy it back. So theoretically, in 3 or 4 days, not the 8 days, this would be worth $1.36, and we'd buy it back. So that's where I'm at with that trade. And let's just see what else. Let's just look at the buying power that we have. So we've got $50,000 of option buying power, and we've done 200 today. The market is down a little bit, so I'd like to take advantage of the down market and place another trade. And what that trade's going to be is going to be in SPY. I say that, and yet the market seems to be rebounding already. So I'm going to trade a SPY trade as well. SPY is an ETF that tracks the S&P 500. Go 7 days out. And I'm going to look at the 16 to 10 delta in here. Right in here, 755. We're at 770. Actually, you know what? I'm going to change that. I'm going to run these trades on September 18th, 43 days out. I'm going to run my 6-week trades. So we look around the 45 day, we're going to run down to the 16 delta. Since the market pulled back, we're going to look right in here at the 15, 16 delta. I'm going to go 720. I'm going to sell the 720. We're going to go 40 wide on that, 4,000. So we're going to buy back the 680. And that's going to give us $1.90. So this is a lower risk, but a lower payout trade. We're going 45 days out. We're going 40 wide. And we're running at the 14 delta. So again, 4,189 divided by 4,000. We're looking at 4% over 6 weeks. And we're going to buy this one back. We're going to set this one to buy back at 90 cents. So this is a lower risk trade. It's targeting closer to 2% profit. So about $90 profit out of $4,000 risk, 2%, 0.25 in 6 weeks. And I'm going to do the same thing on QQQ. I'm going to go out 43 days, so September 18th. And what you'll notice is the volatility on QQQ is higher. SPY was about 31, QQQ 58. So this should pay better, which is why I tend to trade QQQ. And it means I should be able to move further out of the money to still hit that 16 delta. So we're at 655. I'm going to sell the 655, buy back the 615, and see the difference in that. We're about the same delta. We're about one standard deviation out, but this is going to pay $3.13, 15 cents, where the other one paid $1.98. If it gets filled. Oh, it got filled. And we're going to go ahead and set that to buy that one back at $1.25. So we sold it for $3.15, buying it back for $1.25. That is not right. $3.15. If I could type right, buying it back for $125 is $190 in profit divided by 4,000 in risk, 4% over 6 weeks. So again, lower risk trade. We mix lower risk and higher risk in order to hit the target profit of the 4% a month or 1% a week that I'm targeting. And that's it. In and out of the market. I was a little bit late this morning, but in and out of the market in 15 minutes. I do see we have folks in here. If there's any questions, feel free to ask them before we get off. I'm just going to scroll through and look at my other stuff that I track. This is TradingView. I'm watching QQQ go up. I also watch QQQI, which is an income fund based on QQQ, sells covered calls like I sell puts on it and pays out income. Silver's down a wee bit, gold up a wee bit. So gold to silver ratio, anyone tracks the gold to silver ratio. I don't trade the gold to silver ratio, but you could theoretically short gold, long silver kind of thing, and play the difference in the ratio. I look at this more like for physical holdings. If this gold to silver ratio is up around 100 like it's been, let's see if we go back on a physical holding, even up here back in July, 72, basically I could trade 72 ounces of silver theoretically and get 40 some ounces of gold. I'm sorry, 72 ounces of silver for 1 ounce of gold. And then if it drops back into the 1 to 40 range, which it was way back here, then you could theoretically, like here it's 52 to 1. I think the child was more upset about the school bus not showing up than the parents were. Thank you, Brent. I think he was about to. He was very upset pacing in the front yard uh, when it didn't show up. So you could theoretically trade this back and forth and just trade physical gold and silver. The problem is you can't always do that with the local coin shops. So that's what I track on that. And let's just look at American Airlines. It was going down. I was really waiting to freak it down that $13 range to trade it. It bounced up. AMD. Let's look at AMD. It took another hit yesterday. Or 2 days ago. I missed the bottom, but I think we're still in a good position. This is why I run through my chart. I don't have an AMD position open. So on AMD, I'm going to run out 43 days, September. And what you'll see is another high IV rank. And we're going to run down here. AMD at, say, 360 is quite wide still, but not horrible. And I'm actually going to trade this one. So normally I would do 40 wide. But right here, what you'll see with this margin account is that, well, maybe I don't. Yep, I'm going to trade this one as a naked. All right, so what we're going to do here is we're going to, hold on. Excuse me. First day of school, he probably bought back a cold, who knows. But we're going to go 43 days out, so just over 6 weeks. It's going to be $5,400 in buying power. Now, in a standard account, this would be $36,000, but this is a margin account, so it's less. We're well out of the money. So we're going to sell this at $475, and we're risking $54.20. So 8% in 8.7% in 7 weeks. And what I'm going to do is this spread, I'm going to try and grab that middle. So I'm going to try and do it at 5. Pick up a little bit more. Oh, got filled immediately. I probably was a little too cheap on that. And I'm going to set this to close at 250, halfway. So we will revisit that trade if it comes back. We'll revisit it at 250. And really, that wouldn't be that much a move the way AMD's been swinging. But on this case, we're taking out $5,300 in buying power for a $250 profit. So about 4.7% targeted. But the way AMD's been swinging, it won't take but a $30 or $40 swing up to close this out. And we've been seeing those swings with AMD quite a bit. In fact, the expected move on that is plus or minus 84. So we're right outside the expected move. As volatility contracts, we would see that these will become worth less. So if the implied volatility drops on these, then we'll also see the contracts become worth less. Now, if I really wanted to get aggressive on that, I could run out and do a shorter term and do a call spread on that where I sell the call spread with the premium. I don't tend to do this, but I could sell the 480, buy back the 485. I could do more than that. I could do the 490, right? And collect the premium that I spend the premium I just sold, pay it out, and then basically if this were to go up in 1 week, I could pick up another $1,000 in profit right there. Just a little bit. Other trades you can do, go super bullish on that in the next week. You basically sell the put to finance a short-term call credit spread or a call debit spread, right? But I'm not going to do that. Are there? Oh, let me finish just running through. I saw some. See, that's why I go through my chart some days and look for stuff. Amazon is pulled back some. I would have guessed we're going to keep seeing that now that it kind of reset after its earnings. We'll see that keep creeping up. Baba's down. Salesforce up and down. I don't have any positions on Salesforce in. Dow Chemical, FedEx. What's FedEx doing? FedEx is kind of bouncing around. FedEx Freight. Google. Google dropped down. I'm going to wait. If Google gets back down to that 330 range, I'll open some trades on it. Right now, I'll just wait. Robinhood. I don't know why Robinhood was on an upward climb and slipped back yesterday. Intel up. Joby Aviation had bad earnings and yet went up. I guess they had a surprise in their revenue that was higher, but their earnings wasn't that great. That's interesting. Nvidia screaming up again at 220 or 222. Palantir, I exited my position in Palantir a while back, other than in my retirement account. And if Palantir drops back down into this range where it was trading, I would definitely re-enter it. I'm gonna wait right now. SK Hynix down. SpaceX, we traded SpaceX, and even though, look at that, they reported better revenue, they still reported a loss, but a better loss than they thought on their earnings, and yet the market tanked on that report. That should be a positive report, better than expected. But for whatever reason, let's just see. SpaceX revenue up 90% year over year. Starlink doubled. AI soared. And $100 billion in cash post IPO. That just screams great return, great report, and yet the market dropped. So I don't have any clue what that is about. SoFi, Tesla. Tesla might be a trade. The problem for me with Tesla is if I'm trading Tesla and SpaceX merge, then I'm holding too much position in the pair of them. And it's not that I mind holding different Elon companies. It's that I don't want to end up getting them merged and owning a bunch of shares or a bunch of options in the same company, because I am going for diversity. So it's not that I can't afford it. It's just that, and people talk about, well, Tesla was dropping because people can only put so much money somewhere and they're going to pull from one Elon company to go to the other. That's not so much the ability, it's just a diversity. I do want to stay somewhat diverse. Verizon went up on earnings, and I was kind of waiting for it to pull back. If it pulled back to that 42 number, it's probably a re-entry for me. We'll see how that goes. And then Walmart. Walmart down to 108. That actually was an entry at 108 for me, and I didn't see it the other day. That's okay. Options on Walmart tend to be rather thin, not very profitable. So Walmart's one I would be trading out September, and let's just take a look. Yeah, just not much. Notice the expected move is low. We don't have this. The volatility is actually way high on Walmart right now. That's actually not horrible. A 105 100. I might do a 105 95. Or even a 190. The spreads are a little bit wide. That's not horrible. We would be risking 1,000 to make $65. It's just not quite where I want to be with that. 105.95. Risking 1,000 to make 138. This would be a bad play This is not a horrible play, especially in a smaller account. It's $1,000 risk. Oh, that's not 13%. That's not right. 130 out of 1,000. No, that should be 13%, right? 13% profit. I just don't like to be quite this close. We're right in that expected move range. Risk wise, I like to be a little bit further out. Not a horrible play, not one I'm going to take. And you'll have to decide what you want to do. I can't tell you. That's actually kind of the better spreads I've seen on Walmart recently. And do they have an earnings report coming up in there? Here, they have an earnings report coming up on the 14th. So that's probably the volatility we would see is pre-earnings. I'm going to stay out of it. I don't like to gamble on earnings. I'm just trying to grind out my profit on this. So that's all my trades. Thank you very much. If you like what you see, do me a favor. Click the like, click the subscribe. And I should be on, let's see, what's tomorrow? I'll probably be on very briefly for Friday. So thank you very much, and I'll see you tomorrow.